Welcome back. This is the Looking at the Charts report for the 24th of March. Today we'll be looking at 4 charts. First is EURGBP, second is WTI, third is USDJPY, and fourth is USDCAD. Enjoy the report. We make a start with EURGBP's 4-hour chart. So in the past days, EURGBP headed lower and tested our currently noted S1 0.83 support level, which withstood its ground and was not breached. In the most recent sessions, the currency pair has surged, evidence that some bullish interest was applied. If the bulls continue to push higher, we may see the R1 0.8365 coming into play. Other levels we have noted in case the pair is undertaken by significant buying interest are the R2 0.8410 and the R3 0.8450. The R3 remains the highest level reached so far in March, thus can be considered a strong bullish sign for the pair. In the other direction, a move lower could signal the bears continue to drive the price action, and the S1 0.83 may be tested again. If the selling persists, then we may see a move lower to the S2 0.8275 support. However, if the selling is extended, we could also see a move to the S3 0.8215, which is the lowest level tested so far in March. Overall, the currency pair is moving in a large sideways motion between the R3 0.8450 and the S3 0.8215 level. Yet, considering the RSI indicator below our chart, which is currently running across the 38 level, we may be viewing an ongoing selling trend that started on the 17th of March. This pair can be heavily affected by the economic calendar on the 25th of March, as we expect the important UK retail sales rates for February and the crucial German IFO indicators for March. We move now to WTI's 4-hour chart. WTI remains in an upward movement since the 17th of March and in the most recent sessions has reached the R1 115.15 level but was unable to breach it. If the trend is to continue, then the R2 118.85 could come into play, while even higher, the R3 123 level is also imminent. Higher, the R4 126 is a multi-year high and has been engaged on the 8th of March for the last time. In the opposite direction, the S1 107.85 is, in our opinion, the first most probable stop in a downward trend scenario. Lower, we note the S2 101.35 line that was last tested on the 18th of March. At the end, the S3 93.75 is our final support level. The RSI indicator is moving just below the 70 level, implying the buying interest is still in play. Oil traders should constantly monitor developments with the Ukrainian war and potential updates on Kazakhstan's Caspian pipeline terminal, which moves oil towards Russia's Black Sea coast. We move now to USDJPY's 4-hour chart. The currency pair has formed an upward momentum since the start of March, which is noted with the ascending trend line on our chart and is currently trading at a 7-year high. At the moment, the currency pair is trading nearby 121.60 and in the most recent sessions has intensified its upward movement, with the price action moving and climbing away from our upward trend line. In the scenario of a continuation of this trend, we might see the R1 122.55 resistance, which was last visited on December 2015, coming into play. Higher, we also note the R2 123.60 and the R3 124.70, which are also multi-year high levels. If the currency pair is to carry out a correction to lower grounds, we might see a move to the S1 120.25 support level, which was surpassed in the past days. Lower, the S2 119.15 support that was tested from the 17th to the 21st of March as a resistance can be re-engaged, but this time as a support. Even lower, the S3 118.05 level is also a possibility if the selling interest is to be increased. The RSI indicator below our chart is running across the 80 level and could possibly be hinting that some correction lower may take place. Overall, as long as the pair remains above our upward trend line, we support a bullish bias. Traders following USDJPY could watch out for the incoming Japanese Tokyo CPI rates and the final University of Michigan sentiment figure, both to be released on March the 25th. Our final chart for today is USDCAD. This is the 4-hour chart. So the currency pair has breached its downward trend that formed since the 15th of March and seems to be moving in a sideways motion, engaging further the S1 1.2555 support level in the most recent sessions. If the pair is undertaken by a strong buying interest, we might see a move to the R1 1.2595 resistance level, which was tested for the last time on the 23rd of March, but only briefly. In a decisive buying momentum, we may see a move above the R1, with the price action possibly heading to the R2 1.2635, which became a target in the past week. Even higher and possibly to be used in a more long-term strategy, traders can use the R3 1.2670 resistance as a target. According to the RSI indicator's movement, the currency pair is trading nearby oversold levels, yet stabilization seems to be taking place. In our opinion, the currency pair remains in a downward trend, and for us to change this view, we would require a possible move above the R2 1.2835. Traders interested in this pair can monitor the US final University of Michigan sentiment figure to be released on March the 25th, but also developments within the oil market. Oil is closely related to the CAD, as Canada is a major oil producer. Thank you very much for your time and focus. We appreciate your participation, and if you like this video, please feel free to share and subscribe. From everyone here at IronFX, wishes for solid trading.